Hey traders, Raghee here, and in this recap video, I'm going to discuss a little conundrum that I have right now. And that conundrum is with the Dow, and this takes us to yesterday's, 24 hours ago, the buy setup that we triggered on the overextended, the oversold level on the daily time frame, and how that translated into this back in here, this transition, and then ultimately to this very, very ugly move higher throughout today. My conundrum is this. When we were setting up this trade, and let me take you to the daily time frame, because this explains in a lot of ways the importance of the candles and the dots that are part of the tops indicator series that we use day in and day out in simpler futures. And I want to typically see about 3 to 5 red grab candles. So here's 1, 2, 3, 4, 5. And then I want to see a series of 5 dots, 5 propulsion dots, in order to confirm that this is indeed something that has the ability to really organize into more of a bearish trend. Today we got our 5th dot. Yesterday we had 4 dots when I triggered the buy. Now you might wonder, why 2 sets of dots? And I'm actually recording some tutorials for the members to show you how we set this up. There's actually I take that back. There's actually 4 different ways to set up these dots. There's 4 different settings for really 4 different varieties of how I interpret whether or not certain moving averages are valid levels from which to buy or sell. So it's kind of like when those dots are on, it's okay to buy or sell from a certain level under certain criteria, namely a certain series of candle colors and then the number of dots, or it's okay to sell. So I'll be going over that in a series of tutorials in the members area. But suffice to say for now, I had both the 13, this is the 13 setting, and the 21 setting at their 4th dot respectively. So I knew I was just about to do battle with a market that really could be organizing into a little bit more of a convincing downtrend. I think at this point, to really organize into a downtrend, this market, the Dow, has to psychologically break those February lows. I think we've been talking about testing these lows for a while, and we're actually testing them now, but breaking them, breaking these February lows, will be a completely different conversation altogether. Are we going to break these lows? I think that's what would be required to really organize into a downtrend, and it really isn't those heavily weighted Dow components that are giving the market such fits. It's really more of the tech issue. It's your Facebooks, Amazons, it's going to be Netflix, it's going to be Google. Those are a lot of the names that are dragging this market down, those tech names. And of course, the Dow is able to sidestep a big part of that. Apple really hasn't been a problem, Apple being a heavily weighted name here. All right, so my conundrum is this. I have the beginning of a downtrend on the Dow, but I really do believe we've got to break those February lows to organize into a more convincing downtrend. We're not there yet. So I did what any fade trader would do. When the market got down to a number of support levels, including, I think, where the 200 EMA would fall in here, I got long. And that's what we did yesterday into the close. So we were long all through today. In fact, we bought the S&P again the last hour of the day. So we were playing the long side. The Dow as more of a longer-term hold, the S&P as a day trade. But the higher we get, and the taller this candle gets, or the more we start trading up into this range between approximately 24,220 to about 24,430, this area, the more likely I believe we could start to see some resistance. And that's where, if I'm long, I want to be very cautious about going into trailing stop mode and being aware that the market may not be able to get above that level. Not that I'm just going to reverse and go short, but here's what I would recommend everyone do. Start thinking like a day trader. Start thinking about in this zone, you're really now inside the chop of a choppy market, because down here at the range extreme or up here at the range extreme, you know what to do, short or buy. But in this area, in between all this, when we're not at the range extreme level, we're not physically at that level, this is where I think day traders are doing very, very well, because we're still dealing with very tall candles. In other words, very wide intraday ranges. And that is going to be something that day traders specifically will be able to take advantage of. So that's my conundrum. I'm long right now, and I think we could still climb, but at what point do we start to run into resistance and perhaps either engage the longer term daily short that is waiting between about 225 and 435, or do I just continue to play the short-term setups that we talk about in Simpler Futures? And I'm leaning towards the latter. I'm thinking inside this area, I really want to think about being a day trader again. All right, I'll see you in the next update.